In the next section of our discussion about plant assets, we'll focus on the end of their life when we sell them, trade them in, or discard them. Plant assets are disposed of for several reasons. Some are discarded because they wear out or become obsolete, and others are sold because of changing business plans. Regardless of the reason, disposals of plant assets occur in one of three basic ways: discarding, sale, or exchange. In addition, the methodology used for disposals of plant assets can be applied to the disposition of any long-lived asset. Whenever we dispose of a plant asset, the first thing we do is update depreciation to the date of disposal. After completing the update, we can prepare the journal entry. We do so by recording a debit to the cash account if cash was received, or a credit to the cash account if for some unhappy reason cash was paid by the company to get rid of the asset. In addition, we must determine whether a gain or loss is associated with the disposal. A gain is recorded with a credit, just like revenue, and a loss is recorded with a debit, just like an expense account. We complete the entry by removing the plant assets cost from our books with a credit and remove the related accumulated depreciation with a debit. Let's see how we calculate the gain or loss associated with the disposal. Compare the amount of cash received to the asset's book value, cost less accumulated depreciation. If the amount of cash received is greater than the book value, a gain will be recorded. If the cash received is less than the book value of an asset, a loss will be recorded. When the amount of cash is exactly equal to the book value of the asset, no gain or loss will be recorded at all. Now let's look at a specific example of a disposal of a plant asset. Consider the following. On September 30, 2013, Evan Company sells a machine for $60,000 in cash. The machine was purchased 3 years earlier, on January 1, 2010, for $100,000, and it had an estimated salvage value at that time of $20,000 and a useful life of 10 years. Evans uses straight-line depreciation. First, we need to record depreciation through the date of disposition. Annual depreciation is $8,000 because the company owns the asset in 2013 for 9 out of 12 months and must record $6,000 in depreciation. Next, we make the journal entry to bring depreciation up to date through September 30. The required journal entry is to debit depreciation expense and credit accumulated depreciation on the machine. And now we need to make the journal entry to record the disposition. We have previously recorded 3 years of depreciation at $8,000, and the partial year of depreciation is $6,000. So the balance in the accumulated depreciation account is $30,000 at the date of disposal. Subtracting accumulated depreciation of $30,000 from the asset's cost of $100,000 results in book value of $70,000. Now we can calculate any gain or loss involved with the disposal. In our example, the book value of $70,000 is less than the cash received of $60,000, so this disposal involves a loss of $10,000. What would the outcome be if cash received was $85,000? A gain on the disposal of $15,000 would occur instead. Now let's look at both journal entries. If the cash received were $60,000, we would have a loss of $10,000, and a loss is a bad thing. It's an expense. Recall that expenses are recorded with debits. To record the sale of this asset, we debit the cash for $60,000, debit accumulated depreciation machine for $30,000. This eliminates the account balance, and record a debit to the loss on disposal account for $10,000. Finally, we credit the asset account machine for $100,000, the historical cost of the machine, to get it off of our books. Now, if the cash received were $85,000, we would record instead a gain of $15,000. A gain is a good thing, right? So it's revenue. And revenues are recorded with credits. See you in a few minutes for the final video in this series about intangible assets and natural resources. Bye for now.